Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Looking at the Australian dollar, it has been a very eventful week as the bulls have continued to try and push through the 70-cent handle and progress further. However, with the break above 70 figure 5, the market only managed to get to a high of 70.37 and now tumbled back beneath the level of 70 cents. Surprisingly though, the demand has been somewhat muted now since the recent high of 70.37. And this all began with yesterday's announcement of Australia's June unemployment rate, which notched up to 7.4 from 7.1. It is assessed that the market from the close this morning underneath the level of 69.70, and that is, should see further risk to the downside. But keep an eye on these indicators because they haven't fully backed up the break. Nevertheless, if we do see another down day, then this should reinstate at least to the target that's seen somewhere around 69.15 to 25, which could actually extend to 68.55. Overall, though, I feel that the market has quite comfortably broken the bullish factor of the recent test to the top side and could see another one of these candles come through. Let's see if that happens or eventuates today. Since the retreat in the euro of 114.5, the market has actually stayed at another bear candle, but not quite broken down with the technicals as of yet. Although, looking at the dollar index, which measures the greenback strength against a basket of 6 major currencies, has reclaimed the 96 handle after posting an intraday low previously at 95.68. It is given now that if this pattern can hold, then euro should continue to pressure the downside and look towards a level of 113.2025. And if we see it break beneath that level, which let me just bring it down to around this level here, which would take out these tops and this bottom here, then would reinstate the downside towards the region of 112 and reassess from there. Little to say when it comes to dollar yen. Groundhog Day is what seems to be in mind. Now from that, you can see the market, it still maintains to quite a negative outlook as the RSI and the MACD are somewhat negative and therefore could see further risk to the call I'm viewing of 106 figure 40. Any advances should find resistance on the day around 107.50. The pound is now retreating a little bit more overnight, as you can see from the rejections of the 126, this time closed underneath this level and put further threat to the downside with the MACD and also the RSI breaking down. If so, then I am anticipating a move towards the region of the lows of 124.20, 25 and reassess from there. Dollar CAD has found a bit of momentum overnight due to the fact that oil slipped 1% and therefore could see a further climb. But overall, from the parameters of 134 to 137, it's the sideways trade and therefore gives me little view at this current middle range. So therefore I'm neutral until I find or view better assessment from the technicals. The gold slipped further overnight and now closes underneath 1,800 and now questions whether we can see further weakness. Now that will be called if we see a cut of 1,788. Quite an interesting level because if so, we could see the market slip further towards the region of 1,760 to 70 area. And wrapping up with oil, as I mentioned, it was down 1%, but still capped at this level of 41 figure 50. Technicals are breaking down. I know it's been pretty much a very, very lackluster price action, but if it does continue to cap there, then I'm looking back to $36 a barrel, reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report and hope you enjoy the great start to the day and to the new weekend.